I think we're good to go. All right, so welcome everybody. This is the client support meeting for July 2025. We meet once a month, and basically the purpose of this is a little educational content, but more important is to answer any questions that you may have on, for example, the software you may have purchased from us or any of the courses, questions on the courses or trading information in general. Okay, so feel free to ask. And we'll turn your mics on if they're off. I'll turn them back on when we get to that part of the presentation. All right, so Gene, before I get going, anything you want to add in here?
Well, I wanted to say hello and have everybody tell me how great my new header looks with the bull and the bear. Um, but other than that, I guess we love when you all join us for our Stock Analysis Friday on YouTube, 8 a.m. Pacific time every single Friday. Come join us on YouTube. And I guess that's it, Ben. Back to you.
Okay, yeah, the bull, it looks like a bull and a rabbit.
Ah, nope, it's a
Looks
bear.
like you shot the rabbit.
It's a bull and a bear.
Okay. All right. All right. Well, let me get going and just quickly go through some of the administrational items here. First thing, of course, we have to let you know there's risks in trading or investing in the financial markets. The shorter the time frame, the harder it is, and the higher the failure rate is. So keep that in mind. Um, like many of you out there, I love day trading. It is not an easy task, to say the least. You have to put up with a lot of 3 steps forward, 2 steps back type of thing. But keep at it and keep learning, and that is the key. And make sure you cut your losers quick and try to let those winners run. You can have a system that's winning, 50 to 60% of the time, and if it's 50%, that's the toss of a coin, right? But if your risk control is 2 to 1, then and you can get that, then of course you're going to end up being a winner. So you have to constantly test and so forth to see what strategy produces that kind of winning scenario. Obviously, the higher the win percentage, the lower your payoff needs to be per trade. But anyway, that's part of the testing process, and it's a lot of fun. And if you enjoy trading, you'll certainly enjoy that. All right. Another thing too is anything we talk about here, it's based on my opinions using software and procedures I've developed over the last 30 years of doing this. But still, run it by your financial advisor because I don't know your personal situation, and if I suggest something, it may or may not be applicable to you. So definitely check with them based on your personal situation. All right. And past performance doesn't guarantee future performance. And I'm trying to think, a good example of that, by the way, is I remember back in the dot-com era, back in 2000, um, and I was managing money for quite a few people back then. And people were looking at everything from tech stocks back then, the mutual funds that were heavily involved in the NASDAQ. And all the 5-year returns were great. But then, of course, the dot-com bubble bursted, and those great historical mutual funds went down just like the rest of them. So don't always go by past performance is my point with that. All right, and we deal in a realm of probabilities, of course. So always use risk control on each and every trade. And if you need help with that, I've got 2 great books on money management. Check those out. My new book, The Art of Trading, is out now. It's published by Wiley, and that's a big book. That's my biggest, I think, best written book I've written to date, and that's 600 and I guess 8 pages, so it's a big one. Then I have Elliott Wave Techniques Simplified, which is published by McGraw-Hill on the Elliott Wave, which is a form of technical analysis, and the Survival Guide for Traders as well. So those you can put links at the bottom later on, or you can go to our website. All right, this is our software. Many of you own it already. You can buy it as a bundle, a la carte, leave that up to you. We have charting software, scanners, and risk control software that work on a variety of different platforms. And so most popular one these days is probably NinjaTrader and TradeStation. But our charting software also works on MT4, MT5, and eSignal as well. So keep that in mind. All right, and that ends the administrational discussion. All right, quickly, I want to go over Bitcoin before we get going today. How many people out there? You can reply either in the chat or you can. Let me unmute everybody here in case I muted you. See if you can turn on your mics. If you can't, then I will unmute you from the master control. Anybody in Bitcoin? Did anybody either get GBTC, which is the ETF for Bitcoin, or the coin itself?
Yes,
Who is that?
that's Ed. Edward.
Ed, how are you? Well, good for you. Did you get in recently, a while ago? What have you been doing?
No, I've been buying into it for a couple of years off and on, and just just reaching levels before I use the software where I thought I should take some profits. I take some off, and just where I thought there were consolidation points, I just bought more when it pulled back. So yeah,
Good, 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 good. So you've been kind of actively trading it.
yeah, but hopefully every 2 or 3 months, not every week. Yeah.
Well, that's good. Yeah, yeah. No, you don't want to do it too often, especially when it's in a pretty dominant uptrend. Um, yeah, good, good, good. So have you made some money on it?
Yes, sir. I apologize. My dog's coughing in the background, but yes, sir. Yes.
Okay, good, good, excellent. Well, a couple little things on Bitcoin. That I'm kind of noticing here. All right, so basically, in terms of a raw account on this time frame, that's kind of what we're looking at here. That's an Elliott wave count. And for those of you new at Elliott wave, I'm just going to draw a little picture here. Trends move according to Elliott in sequences of 5 waves. So that's 1, 2, 3, 4, and then the trend ends in 5. So this is kind of where we're heading up here. And so we're getting there, right? We certainly are getting there. Now, what's interesting, this is a daily time frame. So I'll put D up here and I'll circle that. This is a weekly time frame and I'll circle that with a W. So that's a longer time frame. And notice that the owl down on the weekly time frame is showing no red. So it started back in October of 24 and actually exceeded the high of here and has not gone red yet. So we're still in a wave 3 on the weekly chart. And this target zone here, all right, basically is going to be when it gets up to a wave 5 up here. So there are 5 waves inside wave 3, and that's what the daily chart allows us to see. So when we hit that 5th wave on the daily chart, that will be the end of the wave 3 on the weekly chart, which means then we'll get a correction and we'll draw the fibs in at that time and see how far we expect it to go down. And we get down to that level, see a turnaround, and then we buy in again. So again, it depends on how you're using Bitcoin. You know, some people buy Bitcoin and they're going to give it to their kids or something. You don't have to worry about trading it really at all at this point, because if we're still in a wave 3, you can just hold it and weather the downtrend, not worry about it, maybe buy more. And then the next time it gets up to a wave 5 on the weekly chart, then you're probably a good idea to unload some of it. For those that are more short term, we'll be unloading up in here, okay, and the wave 5 here. So this would be a sell area here for shorter term traders because this will be a new trend down on this time frame once that hits. And the nice thing about seeing this a little bit is because in terms of education, this is how the Elliott wave and how we look at whether it's a Bitcoin or a stock or the NASDAQ and an index in general. It doesn't really matter. This is kind of how we kind of basically map the market, so to speak. And, you know, learning here, you can apply it to any time frame in any market. This was a major buy here. And I think we actually had mentioned that even in client support back in the spring. And since then, it's done pretty well off there. The other thing I want to talk a little bit about is structure in the markets. We've talked about that before, but Fibonacci retracements is a good way to kind of get a grasp on where markets are possibly heading. And then we wait for them to get their turnaround and look for an opportunity to go in the direction of what should happen next after the Fibonacci retracement. So it kind of happened here a little bit. I actually thought it might go down a little deeper, but it didn't, and then bounced off there. So in any case, as soon as that hits that area there, you want to look for follow through, and we certainly got it. I would say probably it's going a little higher. I mean, the target is 127 to 159 for this wave 5, and the longer term target which is unusual, but it's a little lower, and we're already in it. So we're probably going to get where these basically coincide. Probably will be in the 130 area. So we got a little more ways to go, but it certainly has done well. And if you have bought any of it, congratulations on that. So good job. All right, any questions on this or how I'm using the indicators or anything of that nature? Feel free to ask. Notice we have a green PTF now back on the daily chart, so more highs look like it's coming. I wouldn't be surprised if we get a pullback to the trend line. We kind of got a bearish candle up there with a long wick. So probably a little pullback coming up. And then I would think more highs as the weekly chart is showing bullishness still. All right. Any questions? I'll shut up for a minute. And if you have any questions, let me know.
So
Frank?
yeah,
go ahead.
After you hit your Fibonacci extension, how do you start your next Fibonacci? Where's the starting point?
Well, first we wait for it to get up here and turn. And then once we have that, then we actually start a new trend down. Okay. So
Right.
The way I would do that is once we top out, then I would go to the weekly chart, Cliff, because that's a good question. And basically what I would try to do here is say, okay, so we're heading up here. We're probably going to get a retracement again. And then I would draw the retracements basically based off the wave count here. So that's kind of going to be somewhere along probably however high this gets, we're probably going to be heading down here for a wave 4 in the weekly chart. We have to first wait for it to top out, and then we can draw wave 4 on the weekly chart, and then that will be a shot down on the daily chart as a new ABC pattern or possibly a 1, 2, 3, 4, 5 pattern. Okay.
So when it reverses, it's that point where you click where
Yes.
it draws in the retracements?
Correct. In other words, you're not going to use the daily chart because this is a 5, and we want to be able to draw down the retracement of where it's going to go. And so the easiest way to do that is to go to the weekly chart. And if this is a completion of wave 3, then we know there's a wave 4, right? So then you just draw the fib retracements, and this will be the target for this move down, but this will be a new wave count down to that 4. Because don't forget, you'll have an A wave, right? And an A wave has how many waves in it? Do you know?
A wave?
A wave has 5, right? So that
Right.
would be an A. Okay, you'd see the wave 5 waves down. Then you'd have a 3, and then a 1, 2, 3, 4, 5, and then that will carry over to a wave 4 ABC correction that you could see on the weekly. So fib retracements aren't going to do you any good here because these will be new impulsive waves down. This is the area where you want to draw the actual fib retracements for 4. So to answer your question, how do you know where to draw the fib retracements? You go to the weekly chart. You draw a wave 4 retracement, just like you would do on the daily when this tops out. And let me get the right one. And that's going to be your target for after it reaches the high here.
So if I was in a 5-minute time frame, though, would I go to 10, 20?
Yeah, these are daily and weeklies though. But if you were in a 5-minute, and you wanted to transfer this same knowledge over, then if this was a 5-minute time frame, I'd probably go to a 30-minute time frame over here.
Oh, okay. All right.
Okay, because you want to go at least 5 time frames higher.
Mm-hmm.
Okay.
So when you start, one more question. When you turn it on, blah blah blah. Where would you start? You look for the lowest fractal, or
Wait, say that again. I missed part of that.
so you just turned on your computer and brought your charts up. And you want to turn on your Fibonacci, your retracements.
Yep.
You have to determine where you're at in the wave.
Yeah, so let's just take this off for a minute, okay? So let's say the market tops right now, okay, on Bitcoin. Let's just say we see a reversal, okay? So if I see that this is topped here and everything, and I don't have a green PTF anymore, and I have a red owl here, and this starts to turn red, then I have a pretty good idea that wave 3 is over here and wave 5 is over here, right?
Mm-hmm.
Okay. So then at that time, Cliff, go and grab your fibs and just bring them up. And that's probably going to be a target area right around here for the wave 4 on the weekly chart. All right. So that's about 60,000. Okay. Possibly it could go down to. And then what you want to do also, all right, is let me erase this, but then also look at what happened almost at that 60,000 mark. What did we have here? An order block, right? We had structure and an order block. And an order block is usually a place of congestion. And if you put on volume profile, you'd see probably a point of control here. And that's where institutions, large buy orders came in and drove it up from there. But that's an area where it starts. So there's a strong tendency for the market to move down and find support there again. And that lies right in the area. You can either draw it here or the bottom, but that's going to probably, I go from wave 2. So basically, the reason why I'm drawing it there is that's 1, 2, 3. So this would 4. So we probably will go pretty far down into this fib. We also have some support area here. So we'll just have to wait and see what happens when it gets into that fib and see if we see a turnaround or we have more structure to the downside. But that's the target if it ended today.
Okay.
All right. Does that make sense to you?
Yeah, it makes sense.
Okay. All right, cool. Good question. All right. The other thing too to talk about is what happens in these areas here. When you think of structure and support, I'm just going to remove this for a minute. What happens in this area? As a trader, when we look for structure, we look for previous levels. What happened at that level that I circled? What was that? Here, I'll put a candlestick up there so you can kind of see it better. What happened on that pin bar that I circled? What do you think happened there? Anybody?
It's a reversal.
Okay. Yep. So on this price bar here, you had a whole bunch of selling coming in. All right. And then what happened? A lot of buying came in, didn't it? At the end. And notice the long wick on the candle. You see that? So what usually happens on something like this is that you have a situation where you probably had a lot of retail stops here and here that were long. So everybody that was long this market, they probably had stops here and here. And notice what happened. These stops are called liquidity, right? That's where a whole bunch of orders are sitting, and the market always drives itself towards liquidity. So basically, it ran these stops, and then look what happened. It went up, okay? We also had a fair value gap here, okay, that it went through. And so what do you think about two types of people here? You had people that were long that were stopped out, right? And then you had people that went short here thinking it was going down. Now, the people that went short are trapped. In other words, they're short and they're like, oh no, now we're going back up. All right. And what happens here is they get a little bit of a chance to get out if they want, but for the most part, they're stuck. So those people that bought down here, if they don't get out on the next pullback, they're stuck. And they're going to get out later because eventually, once it gets above these points, they'll panic out. So this area here, as a trader, when you see an area where you have a candle or a price bar with a big reversal, there's a lot of pain down here, okay? And when you see pain, that can be your gain. So pain can equal gain if you're on the right side of it. So if you miss this move up, you don't want to go in way up here because it's due for a pullback. Wait for that pullback and look for the pain. And then if you're going to go here, put your stop under here. But most of the time when you get a pin bar like this, you do get a pullback halfway to the pin bar before it goes again. That's just something when you trade long enough, you notice is kind of a high probability that you get a pullback. But that pin bar usually will hold under here, okay? So what usually happens is a lot of people enter here, okay? They put their stop here, pulls back, all right? If it keeps pulling back, guess what? They're gonna get stopped out and they'll have to look for it again. But a better way of doing it is wait for a pullback and then wait for that next move up and then go. All right, so that's kind of the lesson for today. No matter how you trade, always wait for the push, the pullback, and then go. All right, and that will give you the higher probability trade. A lot of times, if you go long right over the pen bar and put your stop here, sometimes what happens is that they take it out again one more time before it goes. And that's okay. If you get caught like that, it's okay, but you got to stay with it and go again. All right, so that kind of thing. But notice where it stopped here. A couple things to note here. There's your order block right there. That was a small order block here, and you have another one under there. But right under that fair value gap, it took it all and then moved back up. So pain is gain. Okay, so you don't want to be the one feeling the pain. You want to be basically turning that pain into your gain. Any questions on that? Do you see that? And again, you had it here too. Okay, notice the bar. This one didn't come back. Okay, but that's the bar. Pen bars are very strong animals, and notice the fair value gap here and here, and you took out that fair value gap. Normally when you have a pen bar that takes out liquidity, which it did here, and fills the gap entirely, you can go ahead and go long right over the pen bar. And if you're unsure, put in half a position here, put in a half position down here, and a full stop under here. It all depends on how you want to manage it personally. And if you miss it and you want to go in on this here because you had another fair value gap here. You could just go long here as soon as that fair value gap hits and put your stop under the fair value gap. So, you know, we don't always do it perfectly. So if you miss it, the market may give you another chance to get in it and stay long. All right. So kind of, and now at this point we have bearish divergence. So I would draw a trend line up here. I would look for this trend to probably end. This was probably a pretty good sign you were going to get another move up here. You may have one more, unless you get a pin bar up here. Usually you'll have a little consolidation, one more push up before it's over. Okay. But this is a, you know, you don't want to be going long too much up here. You want to be already long. Okay, so you know, Bitcoin is close and getting closer and closer to a top. Not quite there yet, but I would not probably enter it here. I'd already want to be long. And that's just one example out of many. Okay, now NVIDIA is another one I think we may have talked about over the last several months. And this was another good one. Certainly Stock Analysis Friday, we recommended this as well as in the MOR report. But this was another buy down here, okay? And look at all the structured areas here. And again, target, no more, whoop, we have a green over here, so we're still going up a little higher. But again, now you don't want to go in here because it's too late, okay? You'll probably get, this is a micro channel. I would imagine on this micro channels like this, when you have a micro channel like that, okay, that's very strong. So when you break that micro channel, it probably has one more leg up, okay, after that. So I would wait for the break in the micro channel before adding on or doing that kind of thing. All right, well, that's all I got for you today. Any questions? Hopefully this kind of helped you a little bit. I'm looking at the markets from a price structure context point of view. Going once.
Well, I have another question since nobody else.
Good. I love questions. Okay.
So I've been focusing on that PTF cash flow strategy. And,
okay,
PTF,
the cash flow. Gotcha. Okay, with you.
Doing my record keeping, everything, keeping it straight. However, I have not. I'm scanning micros in the 2 minute and 5 minute time frame. Scanning micros, and I'm going in, and you know I'm good at finding the points that I need to find and everything, but they're never 2 to 1 ratio. Risk to reward is never 2 to 1. It's always less than that. I've looked a couple of them. I see they worked. It came out where the risk was like $123, but it actually made $73, something like that. But it's not the risk.
What
risk
time frame?
never one.
Cliff, what time frame?
I'm scanning 5 minute and 2 minute.
Okay.
My scans that I got set up.
What you want to do is wait if you can. A couple things you can do and start testing. One is you can test a 1-to-1 risk to reward, and you'll make money provided you're right more than 50% of the time, right?
Mm-hmm.
Okay, some scalpers, that's all they want. However, the more safer, standardized way of implementing that is be patient and wait for a 2-to-1 setup. That means that when you have a market that goes way up, here, let me just show you here. If you have, let's say you have a situation, here's the PTF down here, right? Okay, and you have a market moving up, okay, and the PTF goes green here. All right, so now we have a green one. And it keeps going up and then pulls back. All right, you want to wait until this pullback ends and then see what the risk to reward is. So in other words, if you think you're going in here and your stop is here, you want to make sure you have, 2 to 1 up there with a green PTF, right?
Right, but wouldn't my according to the yeah, because that would be the low point.
So this would be your
Um,
stop. This
right.
would be your PTF target up here.
Yep. Okay.
Okay. That makes sense? So here's
Yep.
your risk percent, here's 1, 2, and here you're down here. So in a case like this, all right, you may have the risk here, and what you're saying is this, is really a 1-to-1 risk to reward, not a 1-to-2, right?
Mm-hmm.
Okay. Well, you got to pass or test to see if over 100 trades, for example, on the time frame and the methodology you're using, if it's working on a 1-to-1. It's set up basically more for a 2-to-1 risk to reward. So you just be patient. If you don't have the 2-to-1, maybe you'll get a situation here where it pulls back more, and then you do have the 2-to-1. You never know how
Okay.
the market's going to unfold. So my thing is be patient. And actually, when you're trading those short time frames, unless you're scalping really often, a couple trades a day is all you need.
Okay.
But you have to be patient, all right, and
All
wait
right.
for that right setup. And if you lose 1 or 2, so be it. But over 100 trades, you want to see what your stats come out.
Okay.
So
Thank you.
here's my recommendation. I would create 2 sim counts for now.
Two
One,
what?
2 simulation accounts.
Okay.
Okay. Trade 1 simulation account with the risk to reward 1-to-1, and trade the other
Mhm.
one with a 2-to-1 and see which one you do better in.
Okay. Yeah, that sounds like fun. All right.
Okay. And test it 50 to 100 trades.
Okay.
Okay. Make sure you have enough trades that you have the advantage of statistics over large numbers. Okay.
All right.
Yeah, good question. But that's a methodology. I mean, that's a strategy, and you don't need anything else.
All right. So the micros are okay.
Oh yeah, any market was
Okay.
okay. You could trade the
All right.
micros, you could trade the full Nasdaq, you could do it on the ES, you could do it on anything.
I just at first I was starting to think maybe I'm not getting 2-to-1 because I'm trading micros and the
No,
ratio with the yeah. Okay.
no, but here's the thing: you should get it regardless of the time frame. But
Right.
if the time frame's too fast, and by the time you get into it, you don't have the 2-to-1 you thought you had when you did all the initial calculation, so to speak.
Okay.
Then go to a higher time frame.
Got it.
Okay, and then you can work your way down as you get more proficient at it. Okay.
All right. Got it. Thank you.
Yeah, my pleasure. All right. Anybody else?
Yes, better. This is Ed.
Hey, hi, Ed.
Hi, I have a question. I'm just still trying to. I just purchased the software. I still have questions in terms of understanding the OWL and the PTF and how they
Okay.
interrelate. I do have a chart open, like say it's a VRT right now, variant VRT, and I have the daily. And
BRT,
yeah, VRT. Yes, I have the
V or
daily.
V? I'm sorry.
I'm sorry. It's V as in Victor,
Okay.
R as in Rick, T as in Tom,
Gotcha.
Victor. Yeah. And it's VRT, Victor. Yeah.
Okay.
Yeah, and the question I have is on the and I just usually just use daily and weeklies. On the daily, you have the red owl, the red owl, which shows it's a stage 3, and then the owl turns green. So I just assume that we're in a wave 4, right? In a longer downtrend. Am I reading that right? Do I assume that we're in a wave 4 now, and that eventually this is going to top someplace, and we're going to go into a wave 5 on the daily?
Well, not really. So here's the thing. Notice here, okay, let me just erase this here. This was one where you kind of have to also look at a few different things. Let's just see what's going on here. All right, so this obviously was a wave 3, and I'm going to say it topped here. All right. Now, why would I say that? Forget this for a moment. Just forget that for a moment. But why would I say that that's a wave 3?
Because there's a double top there.
Yeah, no, that's good. But also look at the slope.
Mhm.
Okay. And then look at this. This looked like an ABC. So if you didn't have this side of the channel to look at, basically you would, here, let me slide this over. Basically, if you saw this here, and that's all the data you would have, you would think that's a 3, right?
Right.
Okay. So you would go and draw your fibs. Okay. And you would look for it to end somewhere there, which it kind of did, right? All right. Then it moved up, but look at the owl on the next move up. What happened when it cleared the high? The owl went above the previous one, didn't it?
Yes.
Okay.
Yeah.
So this cannot be a 3, right? Not a major 3. It's probably a minor 3 on another time frame, maybe like the 60 or something. But that's not a 3 on the daily. So right away, you're like, okay. So now the nice thing, at least about this, is if you went long thinking this was a 5, you're still going in the same direction, even if it turns out to be a 3, right? So that's a good thing, all right?
Yeah.
So now we move up and we start topping here, all right? And we do not have any bearish divergence in here, okay?
Yeah. I see that.
So there you go. And then we have one more high here, all right? And you do have a little bearish divergence here off there, but it didn't pull back enough to be a major 4. So this is a 4 inside here. So this was probably the end of 3, and this would have been more like a 3, 4, 1, 2, 3, 4, and 5 up in this area here. A little convoluted on the count, but that's the way it would have to be looked at based on what the actual price did. And then after that, it came back down. Now, this, all right, is showing a wave 3, but really it's probably just a wave 4. Okay. And if this went far enough back, and it probably did, it's going to take out the 3 here and move it here. And this is kind of what I'm saying is sometimes with the owl, if you get a very deep retracement, it can throw the indicator off. Okay. And it happens. All right. So in this case here, all right, you have a situation here where it ended in the wave 4. All right. And let's draw this up a little higher. So it went a little bit lower, but it did end in that area, that structured area. It took out liquidity and then went back up. So now we're at the top of another trend up, and you've had so many pyramids in a row. So you don't want to be buying in here. Now we got to wait for the next particular pullback and see if it ends where it would be expected to end on a pullback like this, somewhere in this region here. Okay. And wait for another move up. Now, a couple things based on this. Where could we go wrong? Well, maybe this is a 3, this was a failed 4 and a 5, and this is a wave 3 down, a wave 4, but then this retraced too high to be a wave 4. So the original count like this makes more sense. Okay. So you kind of got to, sometimes it doesn't fit perfectly. Okay. And that's certainly, this was kind of a tough one here, but I would expect this to end if it's going to pull back somewhere in here, but it may make another high before we actually go into a fib retracement.
Yeah. Okay.
Okay.
that makes sense. I was just thrown off because I didn't see any divergence there on the daily. So
Yep.
that's kind of what threw me off a little bit. So
Little tricky. Um, let's take a look at the weekly. Sometimes when you have a hard time on the daily or whatever time frame, go to the higher time frame and see if that helps. Okay. Now this is kind of interesting here because this is kind of telling another story a little bit here. So let's take a look here. All right. And let me just see before I draw all that. Okay. So we have that. Now this one here, what I want to see is notice that this correction hit the target, didn't it? And we
hmm
did have a little red here. 3, 4, 5 bearish divergence.
yeah.
Okay. So then we had a new move down. All right. Now what's interesting about this, we may have had a 1, 2, 3, 4, 5 move down that took out liquidity here. And now we may be moving back up into a new trend here. Okay. So that's kind of the possibility there. But there's sometimes when things just are, if I always say it, if you have to scratch your head more than 3 times,
hmm
probably best to move on.
Yeah. 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 I
Yeah.
mean, I've held this for a while, so that's it was just confused. I was just reading. I didn't look back far enough on the daily to kind of get a clearer picture of what
Yeah.
was. Yeah.
It's a little bit of a tough one because this without this information here, you might have thought this was a full 4 and a 3, but it didn't come down enough. So little tough on that. So on this case here, since you're long, right?
hmm
Technically, using the daily chart, you would have been stopped out on this spike, right? On a pyramid.
Uh, that's correct. Unfortunately, I didn't read it as such. I'm still getting used to the software, but yes,
Okay.
yeah, I know what you're saying. Yeah.
Well, what I would do then is put your stop under here.
hmm
I don't know. Does that still give you a decent profit?
Yeah, I'm up pretty almost 65%.
Okay, good. So
Yeah.
that means your stop would have to go below that point, and
hmm
I think the low of that price bar is basically $110.06. So you want to put your stop at maybe like 110 or something.
Yeah.
Um, but if that gets taken out, then chances are it's going down much further.
Yeah, I really like the whole concept of how the Fibonacci retracements and the liquidity points give a lot more clarity in terms of maybe potential buy points. I used to use pullbacks in the moving averages as indications to maybe add to a position, but I find that prices go through moving averages almost regulated, almost to the point where I mean, moving averages to me are almost useless.
Well, yeah. In fact, I used to trade a system a long time ago where my stop was on a moving average. And I have found that if you don't use the right moving average, then what happens is you get stopped out of good trends way too soon.
hmm Yeah.
You
Okay.
know, so then it became a kind of a figuring out what's the right moving average, and then you're back to well, sometimes this works, sometimes that works.
hmm
You know.
Okay.
I
Yeah.
think, and Ed, no matter what philosophy you use, you're not going to win all the time.
Yes. Understood.
Okay.
Yeah.
And you
Yeah.
have to be okay with that.
Yeah. Yeah.
Again, another great example, and this isn't turtle trading, but the turtle traders, would take every breakout they could
hmm
after like 20 bars. And they went months and months with losses sometimes.
hmm
And then when the trend finally did develop, they didn't miss it because they were always taking the breakouts. But
hmm
then they would add on aggressively, and that's where they would make all their money. But they did have to endure a lot of stop outs. Now, some of the turtle traders deviated from that plan because they couldn't handle the emotions on that many
hmm
stop outs.
Yeah.
And the ones that deviated ended up doing worse than the ones that didn't. And the bottom line, the moral to the story is find an approach that works for you more often than not and stick to it.
Yeah, I would think that most 90% of people wouldn't be able to handle the emotional turmoil of some of the significant drawdowns you find from that trend following system.
Oh yeah, it's hard. I've tried. It's very hard. I mean, really hard. And then what happens is we get our ego involved where we try to tweak it,
Yeah,
and that's according to their formulae, that's not what you do.
yeah,
So our emotions screw us up a lot in trading,
yes. Mhm.
which is what I think makes it so hard. But anyway, the tools are the gateway to give yourself structure so you don't get swayed in that direction.
Yeah, yeah.
All right. Well, welcome aboard. Thank you for sharing that.
Thank you. Appreciate it very much. The software's been great so far. Yes.
Super. Well, if you have any questions, you just let us know. Okay.
Yes.
All right. Great. All right. And Cliff, thank you for your questions as well. All right. So I think
Yeah, thank you.
yeah, my pleasure, Cliff. My pleasure. Um, if there's no more questions, I guess we'll call it a day here.
Great session, you guys.
Yeah, it was a good session.
Yes. Thank you.
Yeah, I love the
Thank
question.
you.
Yeah, good. Okay. Well, we'll be back next month. You guys continue to have a good summer, and we'll see you back here, I guess, in August, right? Wow.
Yes.
All right. All right. Take
Summer,
care,
everybody.
everybody. And we'll post this recording up. It goes on YouTube, right?
Yes, indeed.
Okay. So it'll be posted on YouTube for everybody. All right. Take care, everybody. Thanks so much. Have a good one.
Thank you.
Bye bye.
Thank you.
Thanks, Ed.
Bye.
Yep.